Well, hello everyone, and hope you're all having a great Wednesday. We're broadcasting live from San Diego, California, and thank you so much for joining us. And if you're joining us live, that's super. And for those of you that are viewing the recording, thanks for watching. My name is Jean McDowell with TradersCoach.com, and welcome to Wednesday Night Live. Just a few housekeeping items before we do get started. Those of you that aren't familiar with the GoToWebinar platform, I'd like to show you a couple of the features you'll be using tonight. To start, please locate the questions area on your control panel. And then to test that feature, and also to let me know that you can hear me and see the webinar screen, please type in your city or your country or wherever you are watching us from. It's always fun to see where everyone's watching us from, because generally we've got folks from all around the world, so that's always exciting. Also, this is the area where you can type in your questions for our speaker tonight. And I'm sure you're going to have lots of questions, and he's going to have lots of terrific answers. All right, well, we've got folks from all around, Jerry, so good to see you from Brisbane, Australia, I believe. Al is from Knoxville, Bob from London, United Kingdom, Nicole, Atlanta, Mike Novak from Yuba City, California, and we've just got folks from everywhere. Well, great to see everybody here. Ray's from Sydney, Australia. Good to see you all. And it looks like you can all see where the questions area is, so you can use that to ask our speaker questions. So Wednesday Night Live is designed to bring you an expert guest educator each and every week. That way you stay on top of any new trading ideas and methods, and you can be on the cutting edge. I'm going to now post a link in the chat area, and give me a Y or a yes in the questions, just to let me know that you can see that link. The link that I just posted in the chat area is the TradersCoach.com website. We'd love for you to come by and visit. I got lots of terrific information there on all topics trading and investing related, so it'd be great to see you there. All right, this event will be recorded, and the recording link will be sent to you in a follow-up email from GoToWebinar, so be sure to look for that. It gets sent out about an hour after the event. That way, if you have to leave early, you can still catch the event, and the link will be in that email from GoToWebinar. Well, tonight we've got a really great event with our good friend Dean Jenkins from FollowMeTrades.com, and Dean has a really cool way of looking at Ichimoku and Elliott Wave. And it's really kind of a unique approach, and I think you're going to learn a lot from it. The title of the presentation is East Meets West, Ichimoku Cloud and Elliott Wave. And Dean, of course, is founder of FollowMeTrades.com. He's got over 20 years of investing and trading experience, and he makes his living trading the financial markets. He's an expert in technical analysis, money management, and Elliott Wave analysis. And Dean, it's so good to have you here, and I can't wait to see your presentation.
All right, well, thank you, Jean, for the nice introduction and for inviting me back. I always enjoy presenting here to the Traders Coach audience. I've found, the people that show up at these events are both friendly people and serious traders, so it's great. So as we go through the presentation, I like to keep things pretty informal. I'm a pretty laid-back presenter, and I'm happy to take questions on the fly as we go. So as questions come up, by all means, type them in, and I'll field them as we go. Really want to make it interactive and make it good for you. I noticed a couple folks calling in from UK. It's like 11:30 at night there, right? So you guys, that's commitment. And Australia, I can't even imagine what time it is in Australia. But thank you for taking this time to show up. And I'm going to do my absolute best to make it worth your while and give you something, helpful in your trading. All right. George says, can't see me. Well, you should see my slides, hopefully. That is sharing. I don't have a camera on. Okay. As Gene said, I'm Dean Jenkins, founder of followmetrades.com. I've been working with the folks at Traders Coach. I think it's coming up on 10 years. And I actually, started with them as a customer, and I did some coaching with Bennett, and then progressed and ended up launching my own thing. And we just continue to and really enjoy working together. So it's really been a great relationship. I'm located in Olympia, Washington, just south of Seattle. And I saw we got at least one other person from Seattle logged in. And man, it's hot. It was 90 degrees here today. I can't believe it. It's warmer than San Diego, which is crazy. Usually it's the reverse. But my presentation tonight is, again, as Gene said, Ichimoku Cloud, Elliott Wave, and I call it East meets West. What happens when you combine these systems? As traders, we want the absolute best edge we can get in the market. Anything that can help us just get clarity and confidence about what the next move is going to be, increase the probability of being right. It's helpful. And so I've been using this technique here for I think about 4 years, where I learned actually Elliott Wave from Bennett McDowell, and it's a very simple approach. I'm going to show how we use that. But then I added Ichimoku Cloud to it. I think it just improved my edge. And so I'm really excited to walk through and show you this this material. So quick disclaimer, I'm going to be looking at live markets. I'm going to analyze some trade ideas later in the presentation that you might be interested in. I'll show you some of the ideas that I have right now that I like as potential trades. But all trading carries risk. And so the information presented is for education information purposes. I'm not a financial advisor. And whether you act on that information or not, it's got to be your own decision. Only you know what's appropriate for you. And that probably sounds fair. All right. So what we're going to cover, I'm going to talk a little bit about some tools that I use in my trading. I'm going to talk just a little bit about Dow theory. It's an important concept when you're analyzing trends. I'm going to give a brief overview of Ichimoku Cloud, really how it works, and then how I use it. I'm going to give a brief review of a simple version of Elliott Wave theory, and then I'm going to talk about how I combine them together for high probability trades. Once we go through that, I'll share a couple of my current favorite ideas that are just about ready to go. And then I'll be happy to field some requests, whatever we have time for, and analyze anything you're taking a look at. So that's what we got coming up here. So again, in some key tools that I use in my analysis and in my trading, I use Dow theory, Ichimoku Cloud, Elliott Wave, and you'll see when I show some live charts here that of course I use the art tools from Traders Coach as well. So those are an important part of my analysis and trading toolbox. So Dow theory, this is really important and helpful, once it's been explained. Because a key question we have as traders is, are we in a trend? Has a trend begun? Are we still in the trend? And then when has it ended? And Dow theory, and Charles Dow actually developed, it was a series of editorials in the newspaper that he founded called the Wall Street Journal back in the late 1890s. He wrote a series of editorials on his theory on markets and price action. And so this is one part of it. And what he said was, the definition of an uptrend is a series of higher highs, higher lows, higher highs, higher lows. And that you have an uptrend until that pattern is broken, until it no longer exists. And just the opposite for a downtrend, it's a series of lower lows, lower highs, lower lows, lower highs. This is really important because price does not move in a straight line. So once a trend starts, we get into maybe a trade and it goes up and then it starts pulling back. We get a little bit nervous and gee, is the trend over? Is it, should I get out? Should I take my profit now? But having a set of rules about, when is the trend continuing and when is it ended is really helpful to help you stay with trends and get those really big winners. So I use this, and when I look at price action, I look at a chart, my eyes are automatically filtering for this, looking for these series of higher highs, higher lows. And it's also very helpful in stop placement and trade management. So, a bullish trend, really the beginning of it, the definition of the beginning of it is when you have a high and a higher low and a new high. It takes 3 data points, and then the trend continues as a series of higher highs, higher lows, till it ends, till it no longer puts in new highs. So, we had this normal progression, higher high, higher low, lower high. Didn't make a new high, and then it went below the previous low. that's a pretty good sign that the bullish trend has ended, and that looks just like the beginning of, a bearish trend, or at least a correction to the bullish trend. So you have a low, lower high, new low. That's the beginning of a bearish trend. It progresses with lower lows, lower highs, lower lows, lower highs, until it no longer puts in lows. You get a higher low, takes out the previous lower high, and it looks like the bear trend has ended, and maybe now an up move is coming. So that's just a simple approach, and a way to analyze price action and help determine what the trend is doing. And then we can bring some other tools to bear to help confirm that. Okay, so I use Ichimoku Cloud. And this handsome fellow on the right is Goichi Hisada, and he developed the Ichimoku Cloud back in the 1930s in Japan. He was actually a financial reporter, and he started making some observations and developing a theory. He took a long time to work on it, and he finally published his method, his findings, his math behind it in 1969 in the first book on Ichimoku Cloud. So the Ichimoku Cloud translates into a one-look equilibrium chart. And say I've been using it for a number of years now, and I found it to be very helpful. It's one tool of many, and that's one of the things I like to teach and talk about is there's no one indicator that is going to give you, the green light, hey, thumbs up, perfect trade opportunity. It's a combination of various studies and analysis techniques that I like to bring together as evidence, the way a prosecutor would build a case for a criminal conviction, right? And the stronger a case you can bring, the more pieces of evidence you can bring, then the higher probability is that, the next thing that's going to happen would happen. And so Ichimoku Cloud is a very strong piece of evidence that I use in that overall analysis of a chart. So here's a question. How many of you believe that moving averages matter in trading, in analyzing charts? One of the most popular common indicators you're going to find on a trading platform or that people use in various systems. Maybe just type in a yes or or a no if you believe that moving averages matter in trading and in analysis. So we're getting several yeses. Mike says MAs are important. Yes. They give you a previous average of price perspective. Yeah, so I don't see anybody disagreeing, right? They're important. They are, every indicator by definition is lagging, right? They give you a perfect rear view mirror picture of what has happened. But when we talk about Elliott wave, one of the cool things is if you can see clearly what has happened and there's a pattern there, it can be predictive of what's going to happen next, and that is what we want as traders, right? What's going to happen next? Okay, so Ichimoku Cloud really at its core it's moving averages. It's just a different way of computing them, and it's a different way of looking at moving averages. Nothing more complicated than that. So a simple moving average is the math for a simple moving average, SMA, is taking the average closing price, looking back some variable number of bars, X number of previous bars, calculating the average, plotting a dot. And then when there's another bar, it plots another dot, and so on and so on. That dot turns into a line, and it gives you the average price, average closing price of, some number of bars ago. Most people use 2, 3 simple moving averages, look for crossovers and for direction. And you'll see they're on my chart too. I use simple moving averages. On the daily chart, daily stock chart, I use 200-day simple moving average because it's good to see kind of what the big trend is. And I also know that a lot of other traders are looking at it and responding as price approaches or crosses a 200-day moving average. So if people are going to respond to it, I want to know where it is. Okay. Ichimoku Cloud, rather than taking the average closing price over some variable number of price bars back, takes the average of the highest high and the lowest low over some variable number of previous bars. Okay, so average closing price is different than the average highest price, the average or the average of the highest price and the lowest price. It's looking at the extremes. And then it uses 2 look back periods and takes some derivatives from that and produces an indicator. And so this is what Ichimoku Cloud looks like on TradeStation. And the first line that we have here is this bold yellow line, and it's called the Tenkan line. It's called the conversion line, and it's the highest high and lowest low average for a short number of periods back. The standard factory setting in your charting platform is going to be, I believe, 9 periods back, so it's pretty short measurement, 9 bars. Okay, so you can see it's a line here, and it looks kind of like a moving average line. It's just computed a little bit differently. Then there's what's called the Kaijun, or the baseline, and it's the average of a longer period. And I believe the factory setting on those is maybe 22 or something like that. And you know, that implies that I'm not using the factory settings, and I'm gonna show you how you can get my unique settings at the end of the presentation. But I've changed the factory settings, and I use this in a different way than the classic Ichimoku interpretation. All right, so this purple line is just a slower line. The yellow line is a fast line. You know, and the typical classic approach here is to look for crossovers, right? You want to see the fast crossover the slow, and that would indicate a long move. And then when it crosses over the slow, when the fast crosses under the slow line, that would indicate, you know, perhaps a pullback. And so the classic approach to using Ichimoku Cloud is you want to look for the combination of the fast line, the Tenkan line crossing over the Kaijun line, and price moving above the cloud. So you can see, like, here's a crossover, right? Price is above the fast line's above the slow line, price got above the cloud. That would be potentially a long entry signal. So you're going to see when I show my live charts that I've actually taken the Kaijun and Tenkan off because it's axiomatic. Once you get a crossover, and you know, if price just broke through the cloud, it's axiomatic that you're going to have a crossover every single time without fail. So if that's true, why clutter the chart up with them? The important thing that is produced as derivatives of those Tenkan Kaijun lines is the span A and span B, right? And that's the span A is this green boundary of this shaded area. The span B is the red edge here. And then we end up with this cloud area between the span A and span B. Japanese word for it is Kumo, cloud, right? And that's where the indicator gets its name, Ichimoku Cloud, okay? And so you end up with this cloud, right? And when price is going up, right, it's green, and when price is going down, it's red. And the real use of the indicator is that price has broken through. So what the cloud does a good job of predicting is, or not predicting, but confirming, is an uptrend or a downtrend, trend change, right? So when price is above the cloud and the cloud is green, that's indicative of an uptrend. And even though price will move up according to Dow theory into higher highs, higher lows, higher highs, higher lows, right? As it pulls back to the cloud, the thicker the cloud is, it's predicting that that's going to be a support area, that price is not going to break through it, that the uptrend is still intact. Well, that's super important information, right? You can see this trend here on AEM, right? Price moved up in normal higher high, higher low sequences. As it pulled back to the cloud, it reversed pretty sharply, and it will do that. And then as the trend ends, quite often you'll see a thinning of the cloud, and at these thin portions of the cloud, it's easier for price to break through, and you can see that maybe trends are beginning to end, and then a new trend is beginning to form. So that's how I use the cloud and interpret it. Okay, and yeah, Ida's asking about, got a leaves, asked about recording. Yeah, this has been recorded, and Gene said it'll be sent out in a couple hours after we wrap it up by GoToWebinar, so that'll become available. All right, so that's Ichimoku Cloud, right? And again, I've turned off these purple and yellow lines, and I'm really just concerned with the shaded area, because I'm looking for when price breaks through the cloud, I use that as an important piece of evidence about the change of a trend, that it went from a downtrend, you know, here it was red, price was below it, it broke above it, and a new uptrend began. So I look for that confirmation, and I look at it for support and resistance areas. So I think it's a really helpful tool and indicator in that way. So you can see this is what it looks like now. the Kaijun Tenkan lines are turned off. And in your platform, you can do that just by setting them to 100% transparency, and they go away. Okay, so I'm just looking at the cloud here, and this is a chart. We actually took this trade previously on Kronos and did really well. And we're actually looking at it. Kronos is getting close to another potential entry, and I'll look at the current price on that. Okay, Elliott wave theory. If you guys are familiar with Trader's Coach and Bennett's teaching, he teaches a very simple, repeatable version of Elliott wave. He taught it to me many, many years ago, and I've been using it. So Elliott wave was developed by Ralph Nelson Elliott back in the 30s. Interesting, that was the same time that Goichi Asada was working on his Ichimoku cloud theory. Don't know if they knew each other or were aware of each other's work, but interesting that they were both doing the same, doing their research in the same time frame. Elliott's principle, he simply said, hey, he observed that there seems to be a collective investor psychology or crowd psychology that moves between optimism and pessimism in some fairly natural sequences or waves, in a series of impulsive and corrective waves. And quite often you will see it. Now, I know many people have probably looked at Elliott wave and probably maybe looked at other Elliott wave material, and you become frustrated by it. You go, wow, it's overly complex and it's not repeatable and it's subjective and all these kind of negative things. Here's kind of a classic approach to Elliott wave. You got the grand supercycle and various permutations and super millenniums and my goodness, there's 144 pattern permutations in this approach. I'm not sure if Elliott himself could use this method that is now being promoted in some channels. It's ridiculous. There is an easier way. It's Elliott wave techniques simplified and written by Bennett McDowell, and I was honored that he actually invited me, and I wrote a chapter in this book with him back when the book was released, and I think it's been out 4 or 5 years now. But it belongs on every trader's bookshelf. So go to Amazon and get this book and read it if you want to learn more about Elliott wave techniques and a simple, repeatable approach to using them. It's good stuff. All right. So if price is going to move in these sequences of impulsive and corrective waves, we can when we see waves happen, we can begin to predict what would happen next after an impulsive move. Almost always, I can come very close to saying always, after an impulsive move, a big sharp price move, big rally, there's going to be a correction to it. And surprisingly, we can measure and predict how deep that's going to go using Fibonacci retracement. And then after big impulsive move, after a correction, there's a really high probability that there's going to be a follow through, continuation, another impulsive move in the original direction. And you can predict with pretty good accuracy where that's going to go to using Fibonacci extensions. So retracements for this, extensions for this. So I really only try to trade wave 3, 4, and 5. 3 is the highest, the biggest moves, got the highest profit. 4 is a correction. It could be tricky. Sometimes that's all you have. Sometimes there's good profit. 5 is the most probable. And I say 5 is the most probable trade because you have the benefit of all this history. And if you have a chart that is conforming to a pretty well-known, pretty well-recognized pattern, then the probability is it's going to continue to conform, and you can predict with some pretty good probability what's going to happen next and where that fifth wave will go to. After the fifth wave, there's often a complex correction, ABC. This can be very difficult to trade. You can find enough trades that are new trends, corrections, or continuations. You don't have to mess with complex corrections and headaches and potential losses that can come with that. So I just try to trade 3, 4, or 5. The exact same pattern appears up and down. Looks exactly the same way, flipped over for a bearish trend. Okay, so that is Elliott wave theory. So I bring this together with Elliott wave and Ichimoku cloud, right? And here's here's kind of how you can do Elliott wave analysis on a chart, right? The beginning, this is, you just, when you bring a chart up, you just look at it and go, what was the biggest price move? Well, it was clearly this region right here. This was a huge move, right, on this chart. This is a chart of Vail from, I think last year. It starts at about $2 and goes to over $6. That's a big move in my money. So we see this big move. We go back and we look where it started. Here's the absolute low. Here's the first move up. Here's the first pullback. So we have 1, 2, 3, right? And by the way, we can look for entries as it does what? Breaks the cloud, right? Here's the first move up. Here's the pullback. Remember Dow theory? Higher high, higher low, new high, right? This looks like the beginning of a trend. And lo and behold, it just crossed through the Ichimoku cloud. Wow, that looks like a new trend beginning, right? And it did. It went on to a really impressive wave 3, and then it corrected. So we end up getting out of this trade, right? Taking a nice profit. And then after wave 4, once we see wave 3, we can measure it and see what the expected correction is going to be. And it's 38.2 to 61.8 into a Fibonacci retracement zone. This one hit it perfectly. And then afterwards, correction's over, right? And then all of a sudden we get, right, a move up, pulled back, didn't make a new high. That's why this is not the beginning of the trend, because this move did not make a new high. So it was doing a little complex correction, a little channeling, but then we get this move, and this move, and this move, high, higher low, new high, and we broke through the cloud. This is a pretty good indication that wave 5 is beginning, and we got a target zone from 61.8 to 100% Fibonacci extension. Right? So we take an entry there. Okay, now I use Dow theory and I use the ART tools to also help manage the trade and for stop placement. Okay, so I put my initial stop under that beginning, this thing started with a high, higher low, new high. So at that higher low, right, I put my stop there. Why do I put my stop there? Because of Dow theory, right? And by the way, we got a minor pyramid here because it says, so far we've got higher highs, higher lows, higher highs, higher lows. If that pattern is broken, the trend will have failed. So if the trend's going to fail, that is where I want to exit. And then we use money management formulas. If we know where our stop is, we know where our entry is, we can determine the correct position size. So if we do hit the stop, it is an acceptable loss. Now price progresses, higher highs, higher lows, higher highs. And as it does, we get some ART pyramids as well. And those give us really good places to trail our stop to. Move our stop to here, move our stop to here, move our stop to here. And eventually we get stopped out of the trade. We take some profit along the way. Okay? We do the same thing over here in wave 5, right? Higher high, higher low, got a pyramid. All right, we got places to put our stop. Price plays out, we move our stops, trail it up, and we just take this trend for as far as it will go, using, taking profit along the way, trailing our stop to higher lows, to pyramids, and then getting stopped out finally when the trend is over. Okay, and Anish is asking what ART is. These pyramids are a key part of ART. It's applied reality trading. It's a software indicator product from traderscoach.com, and they are the hosts of this event. And if you have more questions about ART, you can send Jean a note, and I'm sure she would be more than happy to field your questions and point you to some material to explain it more. All right. John's asking, do I go over the settings for the Ichimoku cloud? I'm going to show you how you can get those settings at the end, John, but I want to continue with the demonstration here, okay? So this is how I use it. This is how I bring Elliott wave and Ichimoku cloud together. I use the cloud to confirm the beginning of waves and corrections and new waves. So pretty good stuff. All right, before I analyze your symbols, let me show you a couple that I like right now. So this is my TradeStation platform, and bring up a chart. So you can see my Ichimoku cloud on here, and I have some of the other ART tools. I've got the owl, I've got pyramids on here, I've got the PTF, These are all tools from Traders Coach. But I've got the Ichimoku Cloud, and you notice one of the recent changes I made was I took the offset and I aligned the cloud with current price. And again, I've got a way you can get those settings and make your chart and use it the way I do. I go through a complete explanation of that. All right, so here is kind of a beautiful chart. And that's an important point to make, in that, not every chart you're going to look at is going to conform to Elliott wave. It's not going to have a pattern there. And I think that's one of the things that people get frustrated by is they bring up a chart, something like my favorite poster child for a not Elliott wave pattern is General Motors, right? General Motors is if you just look at price action, let's take this off. Look at the price action over the last year. What has it done? It made a big move down, made a big retracement, big move, big retracement. It swings at random and it's chaotic. There's not really a pattern here that you can discern or identify or predict what's going to happen next. So it's a terrible chart, and I would spend about a half second looking at something like that before I would move on to something that was cleaner and had a better pattern, like Electronic Arts. Can you see the difference in that we have a big impulsive move and we have a correction, and there's something interesting happening right here, right now. So I look at this, again, when we use Elliott wave, all we want to do, first pass is just to see, is there a big move? And yeah, huge move from $160 down at under 80. It lost more than half its value. So that was that meets my definition of a big move. So now I go, okay, where did that start? Maybe there's 1, 2. Look at my Fibonacci retracements and see, how did wave 4 look? If this is 3, this looks like wave 4, and it was, because we had higher highs, higher lows, higher highs, right, in the opposite direction of the impulsive move into this Fibonacci retracement zone, which is between 38.2. And by the way, we had the owl, which is a great momentum indicator, shift polarity from red to green, opposite move or retracement in the opposite direction. Okay, what's happening now? And you can see I got the 200-day moving average here. This is the thick white blue line. The lighter one is 50, so 250-day moving average. And you can see price kind of went up to the 200 and hit some resistance. And now what's happening? It is channeling, right? It's putting in some minor lower low, lower high, lower low, lower high, but it hasn't gone below here. And what's going to happen if EA goes below this level? These two pyramids are going to turn red, and this oscillator is going to turn red, and we're already below the Ichimoku cloud, right? But before we would take this trade, we really want to see it bust out of this channel, start down, we'll get these pyramids confirmed, and we're going to have a great trade candidate here in EA to the downside, and we can project with some pretty good accuracy because we got a wave 1, 2, 3, and 4 beforehand that really did conform very nicely to Elliott wave rules. And we can see that then the price projection for wave 5 is 62 to 33. And if I take this trade, let's say I'm going to put my stop right here above these pyramids at these highs. And if I take my entry here, let me color code these for you. Okay, so that's going to be my stop, right? That's the point. If price goes above that, that's going to mean, oops, that downtrend failed. I'll make this light blue. This is where, pretty close to where I would take my entry if this downtrend is confirmed. And then I got a target. I'm going to set my target conservatively at the high end of this range. Simply what I want to know in setting a target is there adequate profit potential in this trade? And I want to look at the reward to risk ratio on the trade and make sure that if I am correct and if the analysis plays out, that how much money will I make? And if I'm wrong, how much money will I lose? So the amount I will lose, if I take my entry here, the amount per share I will lose is the distance from the entry to the stop. The amount I will make if I'm correct is the distance from the entry to the target. It's about 4 to 1, right? That works for me, right? If it's less than, the lowest I'll ever take is 1.2. I prefer to have it over 2 to 1. Okay, Sometimes there's just a screaming probability in a trade, but the profit's not that good. But I never take anything less than 1.2 to 1, right? Because the whole math of trading, right, your winners have to be bigger than your losers. And if your winners are bigger than your losers by an average of 2 to 1, you can be a 50% trader. You can win half your trades and you can be very profitable. Now I'm going to try and win more trades than that, but you can go through losing streaks, right? You can have the market doing strange things. So if you go, all I got to do is win half my trades and keep my winners twice the size of my losers, man, that just takes the profit off, the pressure off, and you can just kind of relax and have some fun trading, right? Rather than feeling like you got to win every trade. So there's that. All right, Charles says he uses Elliott quite a bit. Good. And I got a couple of requests coming in for some charts to look at. And Anish says, is there any way to determine the time factor? And can we use options? So this concept, these tools that I use, Dow Theory, Elliott Wave, Ichimoku Cloud, the ART tools, they work on any time frame, they work on any instrument. I prefer to focus on daily charts, and I trade stocks and options because it's relaxed, right? There's over 8,000 stocks on the US exchanges, and then you add ETFs, and man, you just got so many to choose from. There's always good trades to be found. And I like daily charts because it moves a little bit slow, and you can, I can get a cup of coffee, spend a half hour scanning, find candidates, put my trades on, and then go do something else, right? I used to day trade. It was fun until it wasn't. It just takes too much energy to sit there and trade intraday for me. Once in a while I'll do it for, I'll have a moment where I just feel like it, but I prefer mostly the larger time frames, slower pace. We spent a couple years staring at a screen for 6.5 hours of the session, and at some point that's going to get old. That's my take on it. All right, and here's a stock, EA, Electronic Arts, and Initiatives. Can you use options? I don't know why you couldn't. It's your choice. I do, and that's my preferred way actually. Is I use these tools to come up with a directional move on the chart. Try to figure out what's going to happen next. What's the probability of the thing happening next? Is there good reward to risk on it? And then I'll go buy an option. So in this case, I would buy, if this trade is triggered, if it gets below this level, I'll go buy a put option. And I keep my option strategy simple. Uptrend, I buy calls. Downtrend, buy puts. That is, if you study options in depth, and if you run the analysis, the most profitable and the lowest risk strategy in options is being long on a directional move. A lot of people like spreads. Maybe would try to make a case for how you're protected by the offsetting thing. Guarantee you, the lowest risk option strategy, if you do it correctly, is to buy puts for a down move, calls for an up move. Your risk is absolutely defined, right? And I go deep in the money, high delta, long time to expiration. And you might go, gee, aren't you paying for time? Absolutely not, because I'm deep in the money. I pay almost nothing for time. I'm paying purely for intrinsic value. Different topic. I get excited about that stuff. But long answer to a short question, absolutely you can trade options, right? For a directional move on a stock that you have identified, right? Okay, so the EA I think is a good trade if it triggers at about 89.40, nice short trade. I'm currently in Win. I am short Win, and I got in this thing because it broke the cloud. It got a pyramid here. So I took this entry when I found this right down here at this blue line. It's ticked up a few times, but look what happened as it hit the cloud and right under the 200-day moving average. It has reversed sharply, and I think there's a good probability we're going to take this thing down to the target, probably find some support at this prior low. But I think Win looks like a decent entry. You can get a better entry than I did. I got in at this blue line. I think you can get in here, and I think it's a great trade. And the ART tools are screaming that it's a great trade as well. So those are two I like right now. So there was a couple of requests. One of them was about the S&P E-mini. So I watched this. Again, I don't really day trade. that much anymore, but I certainly watch. So this is the 10-minute E-mini, the S&P 500 futures contract. And I run a trading room. And yesterday we were watching this chart, and right about here, at about 7 o'clock Pacific time, I was telling the room, hey, this looks like a correction forming. We've had this big run up in the S&P. It looks like we're about to get a correction on this thing. And if you like day trading, you might have an opportunity here. And several folks in the room ended up taking that, and they got a really, really nice win out of that. So absolutely it works on futures, right? So that's the S&P E-mini on a 10-minute chart. Fun stuff. You can see I watch the S&P, I watch gold, I watch oil. Gives good insight into a very large swath of the market. Okay. What other symbols? I think I lost track of the questions. So if you got some stock symbols, fire away, and I'll offer my analysis here. Baidu for John. So Baidu having a little trouble, isn't it? It's having a little trouble. So we had looked at a potential long and we passed on it some time ago, and it's a good thing. We'll take these lines off. So Baidu has been in a long downtrend. And again, you look, you know, if you're going to do Elliott wave analysis, first thing you look for is a dramatic price move, and we got it. We got a big dramatic price move here on Baidu, and it went down and down and down, and it gapped down even some more. I would not try to chase this down anymore. I do not like chasing established mature trends. So I would wait and see if a correction to the upside develops. Now, just because it's made one little move up here does not mean a correction to the upside has begun, or there's some dead cat bounce or some other unfounded thing is happening, right? Remember, what's the definition of an uptrend in the beginning? Higher highs, higher lows, higher highs. And I would want to see this cloud thin and then price break through it. We're a long way from it. So for me, too late for a short and way too early for a long. And by the time we were to have a long develop, then I would question how much profit potential would be left in that thing. So it's not looking that good for me. Charles, interested in Disney. Disney is another one of those poster children for me for a chart that is difficult to analyze using Elliott wave. It used to be. Back here, that was very difficult. That's a sloppy channeling market. Now with this impulsive move, this is new, right? Now we got an impulsive move. Okay, and so we can analyze this, and we can see it had this big impulsive move, and it gapped up probably on earnings, right? We can measure this, and we can see that the correction, that was a really, really shallow correction, this one. It didn't really penetrate deep out of the cloud. We just got a little fly speck here on the momentum indicator of the owl. So I wouldn't call that wave 4 just yet. So we could be having the beginning, low, lower high, of a move down into this retracement zone. I would wait to see if it took out these lows and then evaluate it and see it's going to be a little thin on the profit side. I wouldn't try to take it long, because what do you have? You have a high, you have a higher low, you have a lower high. It is not putting in new highs. So it looks like this uptrend is struggling at this moment. So no trade for me, and that's my thinking. That's why on Disney. Okay. Shop. Shop was looking like a pretty, oh wait, Shopify. This is a different, I was thinking Spotify. Okay, what a beautiful trend on Shop. And to analyze a trend, you got to go find where it began. And we could say this trend really began back here, right? It was channeling. This is where it started. This is the low before it put in new highs, and that was back in the beginning of 16. And it has done nothing but go up. So it's a beautiful trend. And even after this current minor correction, which was not wave 4, you got 1, 2, 3, 4, 5, 6 green pyramids. It's been going on. Even this move has been going on this whole year. This thing's been going on since 2016. It's a little late. It's a little late to try and chase this up. Could it go higher? Sure it could. But all big bullish trends eventually correct. And we don't know when that's going to happen. And if I don't know what's going to happen next, I want to go find a trade where I got some probability in it. So beautiful trend, beautiful chart. Too late for me to trade. Claude FX. Are you asking about Forex, Claude? If you have a specific pair, we can look at it. It works on Forex. John, AXGT. Here it comes. So it is a low price stock, previously higher priced stock. Obviously, it's a gene therapy thing, so these pharma research companies, this can happen, right? Trading at 220, obviously some bad news, it gapped from 220 down to 60, and it's slid from that down to 4. Yeah. The two moving averages are the 50 and the 200. The thick one's the 200, the thinner one. So could you get a little play out of this one? You could, if you could start getting a short covering squeeze kind of thing set up, but it's still putting in lows. So it is not ready to try and do that. If you can get higher highs, higher lows, higher highs, higher lows, if you can get positive momentum, there may be something to be played down the road. And speaking of something to play down the road, here's one that we're watching like a hawk. So here's one that fell out of the sky, fell out of grace. GE. If GE can bust out of this channel at about 10:59, I'm a buyer. I think it's going to be exciting. We got to break the channel. Look how it came up to over the 200, rested on it. At the same time, it broke the cloud and then found support. I just want to see it take out this prior couple highs here. There's a double top right there. If it can bust that, off to the races. I'm going to be trading GE. That'd be fun. Claude, Japan USD. Let me see if I can, I don't trade, but I think it's JPY USD is the actual thing. Here it comes. So dollar yen pair. Tough market. Again, I said the clue that it's not going to conform to Elliott wave, the way you can recognize that instantly is if you had a big impulsive move and you had a too deep correction, right? The limit for a correction is 76.4 Fibonacci retracement. This line, this went way over it. So the correction was too deep. So now it's not an Elliott wave chart. It's a chaotic chart. So you had a big move, you had a big correction, another move, another correction. So it looks like these moves are starting to damp out and get smaller. That's really not something you'd want to trade, at least on this daily time frame. At lower time frames, maybe there's something there if you like it. But the analysis of this pair on a daily time frame is not good. EEM, the Emerging Markets ETF. I haven't looked at this in a while. So what we do have here, we do have an Elliott wave pattern. We have a big impulsive move and an orderly correction. And you can train your eye to see these things really fast, just like that. It's a big impulsive move, correction into the Fibonacci zone. It looked like we were going to get a wave 5 down lower, but then it's also kind of looking like wave 5 might be failing. So the prediction was down here, right? And it was going, got a pyramid, it was all looking good, it's under the cloud. But all of a sudden, some news changed, and this can happen. That's why we use stops, right? We should have gotten stopped out there for a very small loss. It's broken above the 200 and it's trying to get above the cloud. So I would not try to trade this unless this gets back underway, and you really couldn't call wave 5 back underway until it put in a new low there. So that's where we're at on EEM. One more, I'll do gold for Debbie, GLD. And I actually prefer to analyze gold on the futures contract. And then, GLD only trades during the normal session. Gold trades around the clock. It's a global commodity. So you can go to the continuous futures contract and then, come up with your analysis, and then GLD during the regular session is going to pretty much follow it. Okay, so we had this big move down. We had this correction. It looked like we were going to get a follow through with a wave 5, right? But it didn't happen. It kind of failed. Now it's heading up. And again, if you're going to analyze a trend, you kind of got to look in history. And what you can see is this has been going on for a long time. And so sometimes you got to pop up to a bigger time frame to get a clearer picture. And now we can see a better story on a weekly chart on gold. And we can see that, okay, we had a big move down, and we're still looking for a correction up with a midpoint on gold here at about 15.15. Okay, and we're starting to see some evidence of it happening, but we got to take out this high here and see if it's going to motor on up into this zone. Okay, so that's gold sometimes, and that happens on some charts. You just got to go to a higher time frame to get a bigger picture and see what's going on. So that's my thoughts on gold. Well, hey, we're getting close to the end here, and I really have appreciated your questions, your interaction, taking a look at some good trades here. I gave you a couple of my current favorites: EA, if it triggers, and WIN right now. I'm also watching IWM, the Russell. We saw an article today that said, that June rally may have been ill-conceived. We saw the S&P, some weakness in the last 2 days. We're seeing it here on the Russell. I like the way this is reversing. If it's going to break below the cloud, I got a target on the Russell down here below 132, the IWM. So that's one that could be setting up, could be interesting. Yeah, Charles, there's a recording coming afterwards. And I think that's going to come out automatically for everybody that registered. Okay, so I said I would tell you how you can get my Ichimoku Cloud settings, and let me wrap up with that. So I got a special offer today. So I run a stock and option pick service, right? Everything I showed you here today, I trade my own account, and every time I take a trade, people who subscribe and follow along, I send them an alert, say, hey, here's the new trade, and then updates through the life of the trade, so people are able to match the results that I'm getting. And I'm going to offer a discount here. The list price on my website for the subscription is $127 a month, and people that are doing that and following along with what I'm doing they're more than making it back. They're making some consistent profits. But you can check it out here, 30 days for $37, and then after that it renews at a discounted rate at $97. It's a discount off the list price, right? And that comes with 100% money back guarantee, right? No questions asked, no hard feelings. If you want to spend $37, come check out my service. You get to sit in my trading room. You get the alerts on the trades, the updates on the trades once we're in them. Right? Check it out for a month, and if it's fit and you're making some money, stay with me. If it's not, and if you get a few weeks in, you go, nah, just not a good fit, shoot me an email, give me a call, 100% refund, no hard feelings, right? And there's a link to go check that offer out. And I'm going to post it in the chat area, unless Gene has already. I don't know. Let me see. There it is. Gene's on top of it. So there's the link in the chat box. And here's what you get with this service. You get a watch list of potential trades that I found, like the ones I just showed. We're just waiting for something to happen, and we review that in the trading room. You get alerts, email, or text message, and I'm actually working on another app that will be faster and better than text messages, and it'll be global. So when I'm getting a new trade, you get an email and a message. You get the exact details of the trade, the entry, the stop, the target. Most of the trades can be traded either with shares. So go long, go short, just go buy the shares, buy the underlying, sell short the underlying, or option contracts, your choice. I give an option contract, the contract that I like that meets my criteria for 95% of the trades. You get alerts, email, text message when I'm going to make a trade, make a change, move a stop, take profit, close the trade. You get access to the live trading room. We're open. It's an hour now. It's an hour right at the market open. So you can attend if you like. It's not required. You kind of get to see how the sausage gets made. You get to ask questions. You get to have your trade ideas analyzed like we did today. And we do a recording of that. If you can't attend every time, there's a recap where we talk, just, hey, anything new came up. We have a weekly live chat session on Wednesday evenings. So you can just log in, get an overview of current trades. In fact, when I wrap this webinar up, I'm going to go do that live chat tonight at 6 p.m. Pacific, 9 Eastern. You get a one-on-one consultation with me. When you sign up, you get a welcome letter and a link to get on my calendar, and we can talk and get off to a good start, make sure you understand the material. I provide risk management and option trading tools and training so that you can follow my risk management suggestions and my option trading and risk management suggestions, and ongoing support and training. I'm always here to help customers. But wait, there's more. You can also, and it's a good question, Rodrigo is asking, do you have a track record? I do, actually. It's a fair question. You can go to my website, and the website is followmetrades.com. And there's a table down here of the results over the last several years, how the indexes did and how my service did and how we're doing year to date. I'm just about ready to update. About once a month I come in and update this, so I'm due to post the latest results, and they're looking pretty good. And so this is a summary for each one of those years. You can go click on any of these green buttons and see the details of every single trade. So, you know, as of the update here for 2019, we had closed 39 trades. We got a 59% win ratio, 2.4 payout, meaning the winners were 2.4 times the size of the losers. And here's every single trade listed. If it was an option, I tell you what the contract was, and this price would be, you know, the entry price is for the price of the option, the exit price is what I got out. And so the winners, losers, and the stats on the trades. I believe in complete transparency. I don't have pictures of private jets and yachts and villas in the Caribbean, but we do get solid returns, and these results are audited. I have a third-party CPA firm who looks at what I post on the website. They audit I send them my brokerage statements, and they produce reports of their audit, whether I'm doing what I'm actually saying I am. And of course, if I go to that trouble, I probably am doing it. So that's the track record. Okay, and hey, you're welcome. And Bob's asking, do alerts come out during market hours or during the day? The alerts come out, sometimes I'll send an alert and say, hey, there's a trade for tomorrow if this certain price level's hit, so you can stage that order. And then if things happen during market hours, I'll send an update. We're typically in trades 2 to 6 weeks on average. They're daily charts, and we're typically in between 4 and 8 positions. We'll go up as high as 10, as low as 2. So I'm at the low end as the market's making a transition right now. But the alerts come out, you know, probably 60% of the alerts come out during the session, but there'll be after hours where, okay, for tomorrow when we open, we make these changes. Okay. And, you know, a lot of people, my subscribers have regular day jobs. You don't have to be hovering by your computer, right? We're trading daily charts. They're not moving that fast, right? You can still work a day job and follow along just fine. And so there's more, right? Here's all the things with the stock pick service. If you sign up, I'm going to throw in a bonus. If you sign up during this session, I've got a course. I've got an Ichimoku Cloud course which explains in more detail how the indicator works, how to configure it, and my proprietary cloud settings. You get a written study guide, training videos, and a printable trade setup cheat sheet. List price for that's $247. You can get that today for free if you take that 30-day stock picks trial. And Gene has posted that link in the chat area. And every once in a while, I'll get a current subscriber who will go, hey, I've already signed up. Can I get that? Just shoot me an email and say, hey, I want that offer at Wednesday Night Live. So just send me an email, dean@followmetrades.com, and I'll take care of you. And Bob says he believes I'm a real trader with a real track record. Well, thank you, Bob. As far as I know, I am. All right. Well, that takes us kind of up to the end here. I want to honor your time. I've covered what I wanted to cover. I'll give you a few moments if you want to take me up. I know we're going to wrap this thing up, and Gene probably doesn't want to sit here the rest of the night. So if you take that offer before midnight tonight, the recording comes out, you got the link, go ahead and make a bookmark of it and get that order placed by midnight tonight, and I'll honor the free Ichimoku Cloud course as part of your trial.
Hey, Dean.
So I think it's a wrap. Yeah.
It looks like John David is asking that he's already a member, and he wants the settings.
Yeah, so I just tried to cover that, John. Send me an email and I'll take care of you.
You're such a good guy.
I try. I'll go around this life once, right? Why make enemies? Why not make friends?
Awesome. And I guess if people sign up right this minute, they can join you at 6 o'clock in 29 minutes.
That's right. Sign up now. It will be processed automatically. You'll get a link to Zoom webinar and tonight's session. It will happen with the magic of software. You will be in.
There you go.
Nish, yeah, the settings are available in TOS. It takes a custom Ichimoku Cloud version, which I have available to customers. If you sign up for the course, you can get it. All right. I'll hang for a few minutes and see if there's any questions, but that's pretty much it. And Gene, thank you for hosting me again. I do enjoy this audience, and traders, thank you for showing up. I hope you found it valuable. And we'll catch you on the next one.
You betcha. All right. Well, thanks for presenting, Dean. That was a great presentation. Really great participation. Super questions on the audience. And as always, thank you all for being here for Wednesday Night Live, and we hope you join us again next week at Wednesday Night Live at 7:30 in the evening Eastern Time. All right. Have a great night, everybody.
All right.